In today's episode, I want to talk to you about the latest developments in the Russian economy and the shock decision announced by the Russian central bank. Now, if you've been following the channel, you'll know that Russia has been struggling with persistently high inflation. Normally, when inflation is high, you increase interest rates. But if your economy is struggling to grow as Russia's economy is right now, there's also pressure to reduce interest rates. The central bank has announced a cut to 17%. The surprise isn't that they cut the rate, but that they only cut it by 1%. Most analysts were expecting a much deeper cut, given the slowdown and the added pressure from secondary sanctions. Russia's economic development minister said earlier this month that the economy is cooling faster than expected, and the finance minister told President Putin that growth projections for 2026 had to be cut from 2.5% down to 1.5%. Some economists are now saying it could be as low as 1.2%. Meanwhile, Russia's federal budget deficit has already blown past its full-year target, while revenues are being hit by falling prices and Ukrainian strikes, and major businesses are warning of stagnation. Even the CEO of Sberbank, Russia's biggest bank, admitted the country is slipping into technical stagnation, meaning stagflation is now a real risk. Inflation remains stubbornly high, especially food inflation, which is hitting poorer households hardest. Producer prices, on the other hand, are actually falling, showing that businesses are absorbing higher wage and import costs, wiping out their profits. This situation puts Russian companies in a vicious cycle, shrinking margins, rising debt, and borrowing costs at 20 to 25% when you factor in bank markups. That's unsustainable for many. On top of this, Donald Trump has now imposed 50% tariffs on India, partly because of its continued purchases of Russian oil. He's also pushing the rest of the G7 to adopt similar measures. If India and China face coordinated tariffs from the world's biggest markets, it will be extremely painful for them to continue buying Russian oil. And if those flows stop, Russia's revenues collapse. So, to sum up, Russia is now caught between high inflation, slowing growth, falling revenues, and the threat of much harsher secondary sanctions. The central bank's rate cut shows just how bad things are. If the G7 does align with Trump's tariff strategy, Russia could be pushed into a severe economic crisis in the near future. That's it for today's update. If you found this video useful or thought-provoking, please give it a thumbs up and don't forget to subscribe. It really helps with the algorithm and puts a smile on my face. Thanks for watching, and I'll see you again next time.